Hello everyone and welcome to my morning report analysis videos on Tuesday the 24th of April with me, Richard Perry, market analyst at Hantec Markets. We've got a strong move that we've seen in the US dollar in recent days, really taken the market by surprise, I think, and that has been certainly driven by yield differentials which have pushed out the US 10-year yield strongly higher, and that is sort of coming as we've started to see the sort of spread between US and other yields really starting to widen out again, and that is reflective of the fact that the dollar is strengthening. And as I said earlier, we're now strongly higher on the last few days and pushing up on the dollar index towards this 91 level. That is a key sort of medium term pivot line, isn't it? The old September low, the old February high, and also a high back in January. So we are really testing that, but having broken that big downtrend, it really does sort of reflect this turnaround that we're seeing in the dollar, and a decisive closing breach above 91. Well, that completes a base pattern on the dollar, and that is certainly reflective of the fact that euro dollar is sort of testing lower again. 121.55 is a key level to watch out on euro dollar, and that's certainly come as these treasury yields have pushed higher. But the treasury 10-year yield has just dropped back a touch to 2.998 yesterday, so just a shade underneath 3% before it rolled over. Is it going to sort of test that 3% level? I mean, ultimately it doesn't really make a great deal of difference in terms of 3%, 3.01, 3.02, whatever. It's just the fact that the 10-year treasury yield is pushing higher. Now, is this a level that is going to start to mean that the market sort of pulls back a bit? Well, 3.04 was the 2014 high. So, yeah, I mean, around these sort of levels, we're getting to sort of really important levels, and as to whether the dollar continues to push higher, if that yield starts to sort of slow down and starts to sort of level off around the 3% level, then there'd be question marks as to whether the dollar would sustainably push on from there. But for now, we're certainly seeing equity markets which are benefiting from the weakness of the relative euro and sterling weakness, helping to drive European markets higher. The S&P 500, again, sort of with that sort of dollar strength in the last few days, we've seen the S&P 500 falling away, and is now back to a key breakout level. 26.75 was that breakout. So 26.70 in the last couple of days. Is that now going to be bought into? Well, if the dollar starts to correct back, perhaps it will do, but it'll be interesting to see what impact that has on European markets. The gold price, I'll talk about the chart in a bit, but 13.21 is a key level to watch out for near term on gold. That's holding up. So yeah, some interesting moves we are seeing on these markets with this dollar strength and yields pushing towards 3% on that 10-year. So in terms of data points today, we haven't got a great deal of data until this afternoon. We've had German EFO missing estimates and slightly better than expected UK public debt data. But then we look out to the US data this afternoon, and we're sort of looking out for, the Case-Shiller, 2 o'clock. 6.3%, slightly down from last month. Consumer confidence, 126 is still a very strong number, and new home sales just marginally higher at 626. I think the number is there, and also looking out for the Richmond Fed. Will that hold up around the sort of strong 15 level? So let's have a look at my chart of the day, which is the euro yen. Which has sort of been strengthening, and in the last few weeks has been pulling higher in this uptrend. Now the consolidation above this breakout of 132, sort of seen a squeeze between 132 and 133.05. 133.05 is a key level. That old January low became a reaction high, and subsequently has struggled to sort of push out above that level in the past week or so. Now, finding support on that uptrend with this sort of still improving momentum, still positive momentum movements in the RSI around 60, above 50s. MACD lines are still marginally rising above neutral, but still rising, and stochastics are still strong. So you've got this uptrend intact, and whilst that uptrend is intact, you're going to see the market sort of squeezing up towards 133.05. Now, a breakout above 133.05 would again reopen the moves to the upside. 133.80 would be a level to really watch out for initially, but then 134.15 is an old pivot area as well. So you could see further gains to be seen on this euro yen. Certainly, if the market sort of breaks out above 133.05, and the uptrend is supportive of this one as the moving averages also start to turn around. So can the market continue to move higher? Well, hourly momentum is sort of bullishly configured to an extent, but those MACD lines, are they going to start to cross lower? Stochastics are already sort of crossing lower, so you might see another chance to buy. You've got 132.40, which is sort of a basis of a near-term pivot. It's not sort of accurate, but actually, if you look at 132.40 and you sort of pull it back, it actually is an old high from March as well. So it is a relatively sort of important level near term, clearly, that the market has used previously, so needs to be watched again. Today's low, 132.60. As a reaction low. So I wish you good luck in your trading today, and I will speak to you later.